Welcome, everybody. Thank you, Shukri. We are live. We are live. Yes, we're here. Hey, Shukri, how's it going, man?
Well, considering we had the biggest crypto crash ever, and I'm talking in very symbolic terms here. Yeah, it's good. It's good. Yeah, it's very unique. We are living in interesting times. I've been through the bull. I've been to the bear, but I have not seen what I saw last Wednesday. I really didn't expect that.
That was big. That was big. I'm
That was
really
huge.
glad that you're here to help
Yeah,
break it down
yeah,
for us.
correct.
For anybody who doesn't know, Shukri is the Actions to Wealth local expert on all things crypto, and
Yeah.
I'm really excited to have him as my guest today on this show. And we are going to talk a little bit about what kind of impact the crypto activity of the past week might have on these markets. Why don't you just give us a quick breakdown on
Okay.
how it broke down and what you
Okay.
think is kind of driving it all?
Yeah. Okay. So what happened last week was again caught us all out. Again, we are loyal students of you. We kind of didn't do anything much before D-Day, right? And I guess even after D-Day, I didn't take any action. But the point is that usually when you talk about crypto, it follows the Nasdaq, and either you or Julian showed us that, so that's fine. So the issue with last week is that there were two separate messages, and let's break down Asia and the USA. The USA is about Coinbase. Asia is about Binance. You saw before that Wednesday, call it Black Wednesday. I don't know what they call it. Have they given a name? They will. In
Yeah, right.
Asia, in Binance, people move a lot of cryptos, Bitcoin and Ethereum. And when they move it to exchanges, it's a message that they're going to sell. But we didn't see that in Coinbase. So I was kind of, what in the world is going on here? And Coinbase has the institutions and Binance has the retails. Now that's
Yeah,
one that really drove us like, okay, what's going on? Secondly, as I said that in crypto, and okay, I got this wrong. I've learned something. I always wait to what's happening on the Nasdaq. This happened before the Nasdaq even opened. So it's like, what's going on? And when you see that when the Nasdaq opened and the Nasdaq didn't tank, it kind
yeah,
of steadied, and then Bitcoin rebounded. So you're like, what in the world is going on? Now, during that period, when this crash happened and the Nasdaq came up and it rebounded with its biggest candle ever in its entire lifetime, 800,000 accounts were totally wiped out. See, in
wow.
crypto, you have things like liquidation. It's totally liquidated. And let me tell you that last week, I don't have a trading account at Binance, but I could not get into Binance. And this is for traders that use leverage. If you don't use leverage, you're down by a lot, but there's still a chance to recover. If you were wiped out, you were totally wiped out. 800,000 is a lot, is a big number. Now, the problem is this. Once those guys got wiped out, this past week, you've seen a lot of social media messages showing that they got blown away. And that's bad. And that's why I say this will take time to recover, because a lot of it, the volume of people got blown away. In terms of the liquidations, it was 8 billion. Now, let me tell you that 2 weeks before that, on May 12th, we had a 10 billion liquidation. It kind of died down because maybe the big guys were being blown up. This time, it took the small guys along, and they have a lot of Facebook and TikTok. So,
Yeah. That has got to probably be. I'm glad you're calling that out, because that's probably going to be the biggest impact here, is that you have a lot of small people,
yes.
small account traders and investors in crypto getting burned. And if that happens, the message gets around, and
Yes.
then people are going to be less and less
Yes.
interested in up until now it's been,
Yeah.
wow, so you mean if I just buy and hodl it goes
Correct.
up? That's kind of been the attitude. And I mean, it was that way even in
Yeah.
2017 and
Correct.
2018, and then all of a sudden that crash came. But this time around is a whole nother generation
Yes.
of buyers, crypto buyers, that haven't experienced any of that yet. Well, now they did. And so it's really going to be interesting.
Yeah.
I think you're right. It's going to take time
Correct.
for this to sort of work its way through and make
Yeah.
them, back to the old highs, if in fact it
It
does.
does. Yeah, because look at it. At on May 12th, we had a bigger liquidation, but that didn't come out in the social media. So this time,
Well, one thing that did come out over the weekend, I actually mentioned this. I think it was actually Friday. I mentioned this to my wife, who's not a big, I mean, she doesn't pay any attention to the markets other than conversations that her and I have because I geek out about stuff, right? And so I started reading that story about the U.S. Federal Reserve, Jerome Powell, actually, talking about, well, we're going to probably have a look at regulating crypto. And I thought, why? Why should the Fed care? And before I could even voice that question, I'm sitting there just reading the article, and my wife says they can't control it, so they want to. They have to. It's something they can't control. They need to control. And I thought, well, if that's true, that they feel the need to control it, that's news. That's something, right? If the U.S. Federal Reserve says we have to control cryptocurrency in some way, in some degree, then that means that cryptocurrency is some kind of threat to them. Well, it's obvious right now what kind of threat cryptocurrency is. Cryptocurrency is a non-manipulatable market, at least as far as the Fed is concerned. And so if all of a sudden all this printing, this money printing and stuff, both by central banks, not just the Federal Reserve, but all central banks across the world, and governments, not just the U.S. government, but all governments, but particularly the U.S. Federal Reserve and the U.S. Treasury, right? If they're going to continue to print money and just inflate the money supply at a faster rate than anything that's come before, and that's saying a lot, then the inflation would have to show up. Well, they in 2011, 2012, the Fed came up with a way of really kind of putting their thumb on the scale of precious metals so that didn't show up so much. And all that they had to do was recommend to the NFA and the futures commissions and say, change the brokerage, I mean, the margin requirements and make it so that, and as soon as they did that, metals crashed in 2011, I think it was. And ever since then, it's like they had this ability to sort of keep a lid on it. And you would think that they could do the same thing in the crypto markets just by working the Bitcoin futures. But I think what we were seeing this past couple of weeks was the flippening, right? Ethereum and all the Ethereum connected coins kind of dissociating from Bitcoin.
Yes,
Bitcoin's in this flat, and then those things are still going higher. And then of course there's all the fun coins, the Doge and et cetera, right? People getting excited about that. But the main point was, if money starts flowing to those and away from the US dollar, then that's going to make the difference. It is literally going to make a difference in purchasing power. I mean, I had this fun little moment 2 weeks ago where I had somebody in India that I had to pay, and I said, "Do you want to be paid in US dollars or cryptocurrency?" And they said, "Crypto, please." I was like, "Okay, fine. I'll use my crypto account and pay them Bitcoin or Ethereum, whatever they want." And it took a few days for me to get money out of bank into the crypto and then over, and it was like 5 or 6 days it took. And Ethereum was on a tear at that time, so I put the money that I had to pay them into Ethereum, and in the 6-day time period it went up so much that the amount I had to pay them was my gains. And so I just was able to pay them for free, essentially. Of course, now that value of that Ethereum is about half what it was.
I hope he sold it off.
Yeah, no, I didn't sell anything. I'm still a crypto coin believer, in the sense that, especially with Ethereum, I think Ethereum and Cardano are the underlying tech there is like where the internet was back in 1992 or 93. You know, it's I mean, it's probably further along than that, but in terms of the technology, I think that the technology has a lot of
It
potential,
has, yeah.
and this moment right here, where the Fed's coming along and saying we have to control this, just gives it all the more reason that that technology really does
Yeah.
need to be brought into the world and
Yeah,
see what's
correct.
going to
No, I
happen.
agree. Because if not, I think some European bond was issued on Ethereum. But what you say about leverage is very important, because you know what? This leverage, controlling leverage, is already done in the US. That's why you got to split this. There's Asia, which is the Wild West, and the
Yeah.
US, which is very much regulated. That's why I think that Coinbase said their advantage over Binance is they're kind of following the rules. And I think Binance now has been this, right? Binance is this is being investigated by the US, and the CEO of Binance was looking after the OCC, right? Like Bill Brooks.
Oh, that's funny. That's funny.
Yeah,
Yes.
yeah, that is. And Yellen somehow comes out last week and says, okay, all crypto transfers over $10,000, we need to know about it. Okay, that tells me tax. You guys need to pay up your tax. You followed Gordon, you can, assuming you sold all your crypto and converted to US
Yes.
dollars, you should have a good gain by now. Okay? Pay off all your taxes, please.
Right. Well, so coming back to the 14th of May doomsday scenario, I wonder if crypto has a connection to that. But there are two things that are going on. There's the crypto thing going on, and there's the fact that the Biden administration has put the scare out there that they might, completely undo the capital gains tax, right? So if you think about the capital gains tax, if somebody comes along and says there's not going to be a capital gains tax, you're still going to have to pay the ordinary income, which is a fantastically higher rate than the capital gains tax. I mean, at that point, if you're a high net worth investor, what do? Do you say, hurry up and sell? Well, no, because doing that means that you guarantee you'll pay the higher tax rate.
So they will take the transaction and calculate from there, right?
Well, no. It's like
whatever you sell. So now
the only way you cannot pay the tax is to not sell. And I see, what I see here is, I think that there has been some profit taking. I mean, this is where how we ended up on Friday. This is Microsoft here, and this is Apple, and these are both kind of bearish candle, dark cloud cover candles, and they're happening on lower highs, and they're happening at the old resistance. I thought, okay, that's my last chance in terms of hoping to see a big down move is that to follow on from this. But where we are right now is that from the weekend, we got a little bit of a drop, and ever since then, in the 15-minute charts, Nasdaq's doing nothing but going higher. In fact, the Nasdaq has totally overcome all of its drop since from what small drop it had on Friday. I mean, this is it. It's totally over. So I don't see any bit of selling really staging for the coming week. And so I'm going to just have to say, okay, my doomsday May 14th was wrong.
But you were right on crypto. Because
as it turned out, crypto,
that date, as you mentioned, was also the time people were buying Bitcoin.
Yes. I feel like, though, that because there isn't any for sure tax consequence of crypto, that would be kind of an anomaly. Now, it might be that because even before this tax law, this capital gains things was put in place in the 90s, clear back all the way back to 1920, there's the 56-week pattern still holds. So I think that there is this attitude that people like to hold for a year. And it might be that's going on in the crypto markets, but I have no way. I've never heard anybody say, "Oh, I hold for a year and then I give it up." Right? I
never heard that.
Long ago, when I was establishing the 56-week pattern as a potential research tool, I was talking with business professors, business school professors, and professional money managers, and they were the ones that would say, "Well, we'd like to hold for a year. That's what we do." Part of it's because of the tax consequences. Part of it's just because of our game plan. That's, we're that kind of length of investor. And so I kind of feel like that would be interesting if that were happening in the crypto markets. And the only explanation I could have for it would be that there are professional investors in the crypto markets, and they just take their same attitudes towards that. But that is just, theory. I got nothing about that. Let's see. We got a couple of comments here. We got Helen saying, Gordon and Shukri, CNY cracking down more, and crypto is pushing govs out of the game, taking your money. Big question is whether other governments are going to follow what China did. Let's see. Yeah, and should this be a time? I mean, Helen comments, "Hey, we would buy more if we didn't have to worry about taxes." That's exactly right. Not only would they not sell, but they would buy more, and I think that's what the U.S. markets are staging up for. And she says, "You sure it's not delayed? I'm holding off still." Well, it could still come. I mean, I've seen it. I've seen the 56-week pattern take a couple extra weeks, and it could still come later. However, what I've been spending my time making noise about is May 14th, and I'm going to tell everybody here, I was wrong. It didn't happen May 14th. Will it still happen? Could. But now the thing about any really good indicator, and my belief is the 56-week pattern is a fantastic indicator, is that when it doesn't happen, that's information. That's important information. And so what I'm looking at here is, hey, if people don't want to sell, do they want to buy? And it's possible that we could actually see a really good summer. I think that there's going to be headwinds. I think we're going to have a lot of up and down, a lot of sideways. I think the crypto thing is really going to scare people. People aren't going to take their next round of stimulus.
Correct.
I couldn't believe this. I haven't had when stimulus in the U.S. first got started. I actually got a small check because I had made too much money the year before from I had a real estate investment that I sold. So and I held it long enough that I actually had to pay capital gains tax on it. But in 2019, so 2020. I had this really big number that was going to make it so I hardly got any stimulus, and not that mattered, but I was prorated up to the top end, so I got this small stimulus check, and I thought, okay, well, I guess I'm just out of the bracket. I don't get any stimulus. My kids were raking it in. I mean, my youngest, I'm really kind of ticked at the U.S. government, because my youngest, she doesn't need a job. She is able to get by just on the stimulus check that she gets. She didn't get unemployment. She manages to keep her expenses so low that I keep talking to her like, hey, you're gonna go back to work, because she had worked for a year and a half, and then she got laid off at the postal service, and so she. I said, well, all right, come on. There's 1,000 jobs out there. Just go get one. She's like, yeah, okay, maybe. And then she gets a stimulus check in January, and then she gets another one in April or whatever.
I have a question. Did she buy Dogecoin?
Yeah, no.
everyone seems to be buying Dogecoin. Like, what?
Yeah. So she, I mean, it's funny that I watched this happening. I have a child who has 5 children, and my oldest son, he's got 5 kids. He gets 10 grand in stimulus, and he made a bunch of money last year because he's part owner of a company, and he gets 10 grand. And I'm like, what? But he was just right in the spot, and because he has the kids, So anyway, well, all right. So I'm going on about this because what happened is, just this past week in the mail, a stimulus check showed up for, counting for me and my wife. And I'm like, what? I haven't gotten a stimulus check at all since that tiny little one. This was a full check, and full size check in terms of, my income hasn't gone down. So I don't really know what's going on. It just showed up, and I'm thinking, that stimulus money is still flowing. That's crazy to me. And yeah, so I was looking at that thinking, this money has been going into the markets. It's been going into the crypto markets. It's been going into the US markets, and options and stuff. We have friends, my wife and I, we have friends who, they're our age. They've never tried to invest before. And they're like, hey, I want to open a Robinhood account and try some options. And it's like, This particular round that's coming out, I
I
don't think
see.
it's going that way. I don't think people are
No.
going to say, I'm going
Yeah.
to take this money. I know what I'm going to do. I'm going to buy Dogecoin. I'm going to buy Bitcoin.
Yeah.
No,
Yeah.
they're not going to do that this time around. So I think that
Yeah.
that is what is part of what's happening. I think that we won't see this huge run up. I mean, if
No.
people did do that, then we would see it. We would see the
Yeah.
markets take off.
Yeah,
But
what I think will happen is this, because it's good that you say that the Nasdaq might be going up. We're gonna have a good summer. That's important for the crypto markets to recover. But
yes, true.
I think until you give it time, and I'm talking about 8 weeks at least, it will be like it's going to go up. Some people are going to sell. It's going to go up.
Yes.
Some people are going to sell.
Yes,
We're going to
you
hit
are
the
right.
100 MA. Some people are going to sell. Even with blast fast, that's about 43K. Even if we go to the 200, which is at 46, you can check Gordon because I'm not sure what is it now. People will sell some more, because in my mind, I have a program in my mind also. Not that we're going out of crypto. We're just saying, let's balance our portfolios out, the ones that we kind of didn't get out that we wanted to get out of. That's just natural.
Yes, yes. That is a great observation. I feel like, I mean, you know, even the 14, or
Yeah.
56-week pattern, even when it doesn't light off. In fact, this is actually one of the mildest sell-offs that I've ever seen out of the 56-week pattern.
Wow.
But even when it goes like this, it takes a little while, maybe 3 or 4 weeks, and then markets start really moving. And so, like what I'm looking at now is, well, so I have no, I'm sorry, I didn't pull that spreadsheet up. I did have a research thing I'd done where the 56-week pattern happens on Apple. Just specifically, how does the 56-week pattern go on Apple? And what happens is when Apple has a 56-week pattern where, you know, you buy up and then it sells, then that big sell that happens, what happens after that, right?
Yes.
So what I found was that Apple, anytime it sells down in its, you know, worst 3%, which we're in right now, Apple, unlike the rest of the market, Apple did sell off strongly.
Okay.
And so what happens? Well, it takes about 8 weeks from the time that it has already sold off that Apple kind of messes around. But 8 weeks later, from that point going forward, is actually the fastest growth period for Apple.
Okay. Okay.
On average. So I think what we're looking at is probably about well, let's see if I can share this chart and we'll look at it a little closer here.
Because I have a question for you, and it pertains to Memorial Day.
Yeah, yes. Okay, well, go ahead while I'm setting this up. What's your
because you know, I saw Kramer on CNBC. I've been following Larry Williams. However, he stopped the Larry TV service this year because he wants to retire. But I always know that heading into Memorial Day and at least the first part of summer is bullish, or the first 2 weeks. So it's kind of rhyming with what you're saying. And you know, it's like you have to buy like 1 day or 2 days before Memorial Day or something like that. Is that, you know, there's some holidays there that really happen, like 4th of July, if I'm not mistaken, is another one.
Yeah. So actually, I did a story a long time ago on. Whoops, sorry, I keep chart. Where I'm trying to find my daily chart, not my. Okay. So Apple's big sell-off was here from January to March, and then you go 8 weeks from early March, and where are we? We're actually coming. We're into that pretty close right now. Looking at that, come to think of it, because this is the big sell-off. We wouldn't start counting from right here.
Okay.
This big sell-off that happened was 45 to 15, 30. So you had about a 25-27% sell-off. So that's a very, very big sell-off on Apple. And then we're in these doldrums. So yeah, I would be looking for Apple to start having a bullish period through here. But I wouldn't actually right now. let me carry on with your theme. So your question is
Yeah.
Memorial Day a thing?
Yeah, it's
Actually, the
Memorial Day.
story that I did for Investopedia was end of the turn of month effect. That's what it's called. And if you go and you search in SSRN, you know, those are uh, academic papers, right? And you search in the finance area for that phrase, turn of month effect. There's a really interesting paper that was done a few years ago about the turn of month effect, and it dovetails just perfectly with. By the way, what are you seeing on my screen? Are you seeing the Apple chart, or are you
Yeah,
seeing
I'm
the
seeing
Zoom?
the Apple chart, and I see that big sell-off.
Yeah,
Huge.
yeah. Okay, so what we're what the turn of month effect was researched to be was the idea that at the end of every month,
Mm-hmm.
professional fund managers need to make decisions about rebalancing. Not every fund rebalances every month. A lot of them rebalance every quarter, but not all of them have the same, you know, financial quarters, right? So what happens is that these funds, they at the end of the month, Crystal says window dressing. Yes, another name that it's known by. They have to say, well, the thing about window dressing is that's a quarterly thing. You have to report. Here's what I'm holding, as you know, hedge funds or mutual funds or whatever. They have to report what they're holding every quarter. Well, on the every month thing, that's not about, you know, caring what people read as your holdings. That's about performance. That's people, that's funds trying to say, okay, we need to shift money out of what we were winning in, and we need to find something new to put it into. So this dovetails with another article I wrote called the Santa Claus effect. I mean,
Yeah.
that's I didn't name that. That was Stock Traders Almanac. But I found that it is the same situation, and what that situation is the last 4 days of a month
Right.
and the first 2 days of the next month. So that's 6 day trading period.
Where does
Turns out,
July 4th come in?
well, see now, July 4th is a holiday, right?
Right.
So the if in fact what happens is that you are able to buy right before July 4th, then you're going to be just in that 2 day period right when the turn of month effect is. The turn of month effect is people are in the last 4 days of the month, they're selling off. And if you happen to buy during that period of time, there's a good chance statistically that you're going to end up buying a dip, whether you mean to or not. And then what happens is that those funds, they start putting their money into stuff right at the end of the month and the beginning of the next month. So those first 2 days tend to also, the stuff that is going to grow tends to go up right then. And so if you're buying right in front of the 4th of July, you're on that wave, right?
I
If
see.
you're
Okay.
buying in uh, Memorial Day, not on Memorial Day itself,
Okay.
but you know, the weekend right
Yeah.
before,
Yeah. Yeah.
same kind of thing. You're buying that dip.
Okay. Okay. Okay.
And it isn't just that the holidays have any special, it's
Yeah.
just a turn of month effect. The
I
very best turn of
see.
month effect is the Santa Claus effect, the you know,
Yes.
last few days of
The
December.
year. Yeah.
Yeah, I mean, statistically, all years, right? The best days to buy are those days
So
because
yeah.
people have sold out and
Right.
they've pushed
Right.
prices down a little bit, and then they start buying up a bunch. And if you're
Okay.
careful and you pick the stuff that is going up at that time, you can get some outperforming gains. So I would think
Okay.
that this year, Shukri, the Memorial Day weekend, which you know is
Yeah.
the May 31st. So you're talking about buying this Friday,
I
buying this
see.
Thursday or Friday,
And you
and being
catch.
a buyer at that particular time could
Okay.
be a very good idea.
So if U.S. Independence Day were 15th of July, we'd probably not see this, right?
That's right. I mean, I'm
Okay.
not saying it's the only thing going in the markets. I'm just saying that there was a paper that observed that, and I did my own studies
Yeah.
after reading that paper to look over the data. I looked it over. I found that the turn of month was more pronounced in the last 25, 30 years than it was before that. So, which kind of makes sense because you get more and
Okay.
more money
Yeah.
moving into
Yeah.
professional funds.
That solves a real big mystery because I was seeing Kramer. He was saying like this thing works every year, and I'm like, what? How can it work every year? Like,
Yeah. So you know, other people are like, well, sell in May and go away, right?
Yeah.
But then come back and buy in June. Well, yeah,
Ah.
the sell in May and go away is an old saying that you know, you sell in May and then you come back somewhere in October and buy then, and it's really just buy the last or you know, the winter months and sell the summer months, and there is enough variation year to year that it's there is an effect there, but it's not a big effect. The turn of month effect is actually a lot bigger. You can actually make more gains through those periods than by trying to observe the turn of month effect than you can just on the
When's the
whole
options class? We need an options class
yeah,
before the
right.
before the
Well, that's exactly it. See, if we were to look at Apple right
Yeah,
now, there's
I
two
know.
things going on. There's this turn of month effect happening, but there's also the fact that you know, Apple at earnings stuff in options, you have implied volatilities increasing as you come up to earnings and then
Right.
decreasing after earnings.
Okay.
So between one earnings and the next, I'm pointing at my screen, but I should be doing it because I'm sharing the screen here. So between one earnings and the next, you have this dynamic where implied volatility drops and then it comes up. In fact, I can actually put that on an indicator. Let me do that here. I've got a nice IV rank and IV percentile indicator, which will help visualize that. And so if you're a TradingView user, you look for that IV rank and IV percentile indicator. This is actually kind of nice, and we can see it right here. So you see
Okay.
how between late January and early February, you have implied volatilities moving higher,
Right.
then moving lower, right? And then it's
Ah.
really low through right through here. And then as earnings came, it got higher and higher. Well, look, now we've peaked and we're coming down.
I
So
see.
the thing about implied volatility is when you're going down, you want to play different strategies when implied volatility is falling or when it's rising. When it's rising, you want to play some sort of strategy which helps you take advantage of that. One of which is a calendar spread. Calendar spreads are
Right.
fantastic.
Right.
In fact, well, I don't know that I have time to cover it, but I did a calendar spread trade here that was really good and it worked
Russell,
out well.
IWM.
Yeah. Well, on IWN and on Apple.
Yeah.
But
I didn't do the one on Apple. I did the one on IWM. That was good.
oh yeah. So in fact, before I go anywhere else, no, let me finish my explanation. I'll come to that. I have that spreadsheet. I want to do the final round of that spreadsheet here. The thing is that when it's running up, when you have implied volatility running up, that's a great time to be a buyer of regular old options. It's when it's going down, that's a better time to be a seller. So like right now is a fantastic time to be doing what's called bull put spreads, selling vertical put spreads, or doing butterflies. You know, when things are going down in implied volatility, that's actually paying you.
Yeah, there's many strategies like butterfly, iron condors, and all that. Man.
Yeah. So iron condors are probably going to be the best strategy
But it's
all
hard
this time
to
because
calculate.
prices are going to stay inside of a range. You're going to
Correct.
collect volatility on both sides, and yeah, that's probably going to be the trade for the coming summer. But
Right.
calendar, you're doing a calendar and a diagonal spread, even when implied volatilities are falling. If the price is going up and up and up, well, the fact that they're falling means that you're not going to do quite as well as you would have,
Right.
but you're still going to do well.
Yeah.
So I think that being an option buyer on Apple right now has a lot of potential, a lot of good things. Having said that, let's see. Helen's got a couple more comments. What about the third Monday effect, Gordon? Is that an inventory thing and not an end of month thing? Actually, the third Monday, well, yeah. So that's really going to be an option thing, is what that's all about. Because the third Friday is the end of month expirations for Friday. And so
Right.
people get into position. If it's
Right.
less and less pronounced than it used to be, but because of all the weekly options. But it used to be the case that on the third Friday,
Yes.
you would hardly have any movement at all. It had always tight, small range days. That's because market makers had all this extra option inventory and they had to not get killed. They have what's called gamma risk, meaning if you get a quick, sharp move at the very end of an expiration period, then the guys who sold the options can get soaked. Well, these are the guys that have a huge uh, credit. Each one of the market makers on the options exchanges, they have $1 million line of credit. That's over and
I
above whatever
see.
they have in their accounts, right? So they can throw on all kinds. They can throw on thousands of contracts on the last day to try to bring things in line and grab as much premium as they have to protect themselves, pad against the risk that they have. And if in fact they do all that and the price still starts moving, they'll go out to the futures markets and start selling it
I
down to try to bring
see.
it back in line.
So the
Because
time of expiry is 1 p.m. Eastern. Is it still that?
no, it's the market close. So it's
Ah.
whenever the market closes is the actual I mean, the
Okay.
actual expiration is on Saturday, but market
I
close, that's when prices stop moving.
see.
So
Okay.
but anyway, what happens then is that they're holding things in really tight. So the Monday
Correct. Correct.
before and the Monday
It
after, the
just poof.
fourth Monday, that's when you're
I
going to get
see.
significant levels of movement just sort of taking off. Speaking of which, today is the fourth Monday, so we have been looking at the markets on Mondays, most Mondays, and we have been seeing kind of small, lazy moves, right? Not
Yep.
not too much going. I think today could be kind of a big move. We could kind of see a big update today in the markets because, well, you saw it, the Nasdaq
Yeah.
just pre-market has brought back all of the things that it lost on Friday. And then now we're going to start off on Monday doing what? Well, nobody's going to be afraid. Plus, all that money that came out of the crypto markets,
Yeah.
it's got to have somewhere to go. You can't make any money in the bond market,
Yeah.
the commodities market, maybe. But most people's retail traders, especially, they don't have a way of buying
Yeah.
gold or in the futures markets. They don't have futures markets accounts. I mean, some do, but not
And
most.
yeah, and I think Robinhood, you can go from the transfer money from the crypto to the stock market account, right?
Yeah,
And I think it's the same with eToro also, because that's the
yes.
same. You don't have to do anything.
So yeah, Helen says, "What? You got to explain all these volatilities." Right? Sorry, I wish I had time, but it's basically the implied volatility thing here is just how expensive are options in general. That's
Correct.
that's what that's yeah. Um, if it's high, they're expensive. If it's low, they're cheap.
Yeah.
Yeah, that's all that you need to worry about for that. But so uh, yes, I want to show everyone because I showed this a few weeks ago. This is one of the things I've learned in my years of trading is that if I'm wrong, I don't want to be out of the game. In
Yeah.
fact,
Correct.
I would love it if there were a way for me to be wrong and still make money. So
Yes.
here's what it is, right? I have been showing this chart over the past few weeks of my strategy to try to take advantage of the big doomsday trade on May 14th that I assumed was coming. Well, okay, I was wrong. It did not drop fantastically. But
Yeah,
let me
but
show
here
you.
the breakdown in IVs can give you that profit.
I'm sorry, the what?
The breakdown in implied volatility.
Oh yeah. So it can, but I actually just made money from the implied volatility, the time value, right? Um, I just made money by hedging my bets and being um, having something that was going to make me money, even if I was wrong. So what we did, we started off buying these put options, which were on April 14th. I bought IWM put options, 3 contracts, and those 3 contracts were for $294 each, cost me $882. And then I bought Apple put options that expired in June, and the strike price was 105, so it was way out of the money. IWM was pretty far out of the money, but not quite as far. And so that's why it was more expensive. Anyway, the apples were 95, so I bought 5 contracts of those, and the amount of money I put into it was 475. And then every week I sold a weekly option against it. In the case of IWM, now there was one week I did not sell because I was too committed to my idea, and that was May 14th. I didn't sell on May 14th because I thought, hey, we could see a huge crash, and if it does, those options would kill me. And so I didn't sell them. I missed out on that particular week, but that was my strategy because I wanted to, had the markets come way down, I wanted to have nothing but puts on, and those puts would have been fantastically profitable. Well, they weren't fantastically profitable. So this is the kind of trading it's so important to do to whatever extent you can. You come up with an idea, and then you have a way of making sure that if you're wrong about the idea, you don't lose a ton of money. In fact, I heard you talk about that in the crypto market
I did
last week. It was really exciting to me to hear that because
let me show you my crypto account after. But you're right, Gordon. I think all of this, ignore everything in social media or whatever you hear. But I've been in the options market before. I was very active options trader. With now it's TD Ameritrade, but it was last time Thinkorswim. Yeah, you have to know the market. You gotta do your homework. And last time Thinkorswim, you can calculate all this, your maximum loss and that. Put the trade and you'll be okay most of the time. Nothing is guaranteed. But when people go in like Dogecoin and not understanding the whole thing, that's when we get problems.
Yeah, that is unfortunate, right? If with crypto, with anything, if there's going to be a big move and there's going to be a big opportunity, that's great. Sure, let's take advantage of the opportunity. But if you take advantage of the opportunity and you're wrong, it's just a lottery ticket. Did I win? No, I didn't. Game over, right?
Correct.
Trading, the business of trading is the idea that if I'm wrong, I still want to have some way of staying in the game. So for me, these options, this is how it worked. In the case of the IWMs, I sold a put option that was further out of the money. In the case of put option, that means a higher strike price, right? So I bought the 210s, but I sold the 218s, the 214s, the 220s, the 220s, and then most recently the 213s. And I collected this amount of money each time. But the total collection, so that one, that expired, that IWM, it expired last the 20th. And so, what did I get out of it? Well, I collected $798. I had to pay $882. That was a total loss of $84. However, my original risk was $441. I had been willing to lose $400. If I got to the point where I was losing $440, I was just going to cut it. I did not want to risk any more than that, but I never did because I was collecting all along the way. I never came anywhere close to that. Well, I did lose on the trade. I lost $84.
Yeah. Right? So what do you call it? Because the option, the time decay, right? You go way winning in terms of that time decay.
That's right. That's right. I'm winning this contract here that was 36 cents. I collected all of that because it was out of the money and the time decay wore away, and so I got to keep it and so forth, all the way down. So that one I lost $84. This one here in the Apple trade, I actually ended up not making losses because Apple's in premiums were actually better, and so I collected the 16s. I only had to pay 95. I didn't have to make 294. Right? It was easier to get this premium. 16. Then I got 52, 59, and last week here. I skipped May 14th. Last week I got 50 cents. And then you add all that together and I was positive 490. So if you put these two trades together, this is my whole May 14th trading approach. I spent $1,357 with those two trades. And then I gained 574. That's wait. I can tell you my math is wrong there. I think I must have added instead of subtracted there. So hang on, that's I-22 minus 20. Yes. Okay, let's try that one. A12. Wait a minute. I think that's 22. That'll be 20. There we go. I think I got it now. That's it. So it came up with a negative number. But anyway, no, that's still not the right number. This minus this. Oh, I see. I got it wrong in the order. This, the I-20. I don't know. Anyway, here let me just say that what I gained was 490 minus 84, so 408. I'll just type that in. There we go. 30% on my money.
Yeah, this is a challenge for me, Gordon. This is why I don't do Condors anymore. The spreadsheet is too
complicated. Yeah. so the thing is, I was wrong about the trade, and at least for the money I tied up on it, I made 30%.
Correct.
That I got to tell you, when I first got started trading, I didn't know anything about this stuff. I didn't know how to make a trade that I could have made money when I was wrong.
Correct.
But that's what I expect to be able to teach people when my options class comes around. So I'm going to make a shameless pitch for it, because I don't want to see you make losing trades in options all the time.
Can you make a simpler spreadsheet for a Condor? Because I have no idea how to use it. It's still
great. Thank you for the suggestion.
I don't want to see it.
Yeah. I will do that. In fact, the easiest way to think about Condors, Shukri, iron Condors or regular Condors or any of the butterflies, any of these, right? The easiest way to do that is to just take your net cost or credit for the whole trade, all 4 legs, right? Boil it down to a single number, and then just pretend like that number is your number, right? With a Condor, you're usually looking at a credit. And so let's say that's 52 cents or $1.20 or whatever. What you're doing is you're shorting a penny stock. Think of it that way. I want this stock to go out of business.
The
iron Condor is, I don't want that trade to come outside of the range. Well, let's just look at a quick example here. I have a nice Amazon chart that's really fantastic for that. So here's Amazon. Now, Amazon, an iron Condor on Amazon would be a high net worth individual's game. The contracts on Amazon are super expensive, right? That being said, you could do an iron Condor on Amazon that would really work if you used these strikes far enough out. So iron Amazon for almost a year has been in this range. You put on an iron Condor with the idea that it's going to stay in that range. You have a vertical spread up at the top and a vertical spread down at the bottom. And as long as Amazon stays inside of that, then you get to keep the credit that you sell it for. Now, if it goes outside, you really get soaked, right? But let's suppose that you could do this whole thing on Amazon for a $5 credit. And then you would think of that as like, this is a $5 stock and I want it to go to zero. I want it to go out of business. And so I'm shorting it. And so you put the whole Condor on, and then you just watch that number to make sure it just goes lower and lower and lower and lower. And then if it does, great, you win. You got to keep that money that you got credit to you. Now,
and I'd avoid the earnings report.
Yes. Yeah. So don't do it over earnings, right? Absolutely. But the best time to do an iron Condor on Amazon is probably like a week after earnings, right after earnings. Then you go and you put that on, because then that implied volatility is shrinking all the way and you're capturing it, right? So anyway, the way to do it is just to look at that credit as if it were its own trade. And if you were to go short on a $5 penny stock and it went to $7.50 in one day, you'd freak out. You'd be, I want to get out of here, right?
True.
That's the same thing with the iron Condor. You have the trade on, and if it starts going above your credit and going against you, then you have to respond, and you have to figure out a way. The nice thing about the iron Condor is there is a nice way. You can get rid of the one leg that's going to be killing you because out of the four different pieces of the iron
Yeah.
condor, there's only one that's going to cause you pain, right?
Yeah.
So you go ahead and you take that loss, and then you let the other ones ride. And if it turns out that you're really wrong, well, you'll at least minimize your loss.
Yeah.
But if you're super wrong, you could end up making a big gain. And so
Yeah.
that's the thing. You have to have, with iron condor, you have to have this parachute plan that gives you the possibility of making money.
Yeah, but this is the thing. This is trading, right? You have to understand the rules of the game. People don't understand the rules of the game. Let me show you a crypto chart. See, in crypto, you have to remember one thing. Start small, grow big, cut loss. Whenever it's time, you got to cut loss and have discipline. Now, this is my trading account, and it's after the crash. I did not anticipate the crash. I started early in the year. It's now showing 421%, and that's the equity curve, just like that. Now, on the one hand, you can say I'm pretty darn depressed that this fell, but hey, look at that. That was there, and that was just money management and money management. And when it came down here, I have rules like 20% of the entire portfolio. I am out. I got out. That's it. I don't know. Should I be depressed or should I be happy? I'm kind of, well, maybe because a lot of my friends are depressed. I'll stay depressed.
Congratulations.
I'll stay depressed for the sake of the squad. Okay, for the sake of the squad. But that's it, Gordon. It's like, you know you got to do it, but you still don't do it and hoping. And let me tell you the number one mistake of crypto people. Here's the deal. They come here with a lot of hope. I came here knowing that, hey, if I'm down by 20%, that's the end of my very young crypto career. I am so out. But because the way it's structured, when it go up, I said, did it go down 20%? This was a move of minus 0.1877% because I saw the statistic. This was a move of minus 16.89. I got out. My only regret here is I should have based this drawdown based on the ATH instead of the daily close. So if you can discipline yourself in crypto, which many cannot, to be fair, then you are okay. Now, another example is, again, start small. I closed a Forex account in November. I did this with my students live. I started at 3.2K US. This was a Forex account. Let me tell you, during the peak, this was like 49K. Now, after the crash, this is like 38K. Again, showing the same thing. So yes, I am depressed here. I want to jump off a bridge, but it's like, it's just like a drain, guys. I'm going to jump off the drain because I'm together with the squad and we are all depressed. But I just want to show that I was discussing with you, Gordon. Again, I know iron condors. The hard part is to study all this, and then you start a small account and try again. Then only you get serious with things. If you can't do that in any other, and not only cryptos, guys, in any financial instrument, I can promise you, you are going to get burned. That's it.
Thank you, Shukri. That was excellent. I hope everybody enjoyed hearing that. And Shukri, a fantastic guest. Thank you for being on my show today. And I would love to get feedback from anybody if you like that information and you'll want to hear more of it, but or not. Either way, tell me what you think. We've got just a few minutes coming up to the market open, and let's see if there's anything buzzing that we should know about. I'm looking here, going back to Apple. I'm going to go hit the NASDAQ. Oh, actually, I'm going to check my favorite currency pair, Aussie yen. And what is the Aussie yen doing? See, so it's coming up on the day. I'm going to go ahead and come down to a 5-minute chart there. Get rid of the IV rank study. There we go. All right. So Aussie yen also coming up, just like the NASDAQ. It's a little bit of a pullback, but coming right into the open of the markets. We're still looking strong there on the Aussie yen. And the NASDAQ then in Q1 holding, it's dropping a little bit. So that I think is going to set the stage for probably a quick drop and then pop move on NASDAQ stocks. I would expect to see them kind of come up we've got just 2 or 3 minutes left, and I want to tell people about the trade I am watching this week. That is the stock NVIDIA. So let's see. I'll actually have this chart here. I'm going to go back to sharing my screen because this is an. All right. Can you see the NVIDIA chart there? What I'm looking at is a comparison. This is a weekly comparison between NVIDIA and Taiwan Semiconductor and AMD, Advanced Micro Devices. These are all three impacted by the semiconductor supply crunch, right? We just have chips can't get made fast enough. Chip factories take a while to build the molds and then build the factory, and you build the production lines and so forth, right? So the whole post-COVID kind of situation, people had to not work in the factories like they were, and all kinds of things with the silicon chip industry were constrained. And that's why we've got, graphic cards. People can't find graphic cards. They can't find enough crypto mining tools and so forth, right? All of that's going on. But at some point that's going to end. And the big question is now that time? This is a weekly chart, so it's a really long-term look, but you can kind of see how AMD and NVIDIA have been in this flat move, and NVIDIA just a little over a month ago kind of poked up to a new high and has come back in this flag pattern, and last week kind of went up. Well, look, if the NASDAQ's going to go up in the coming week, then this next week's candle for NVIDIA could be green all by itself. But we've also got earnings on NVIDIA on Tuesday or Wednesday, I can't remember. And so I think that there's a good chance that if there's good news and people like what is being said, that NVIDIA could end up making a new high. Got to tell you, if that happens, Taiwan Semiconductor and AMD are going to follow right behind. They're going to be good trades. So if we're talking about a bullish environment, here's the daily charts on both of them. If we're talking about a bullish environment going forward from here, and especially in through June, it's possible that these are the three stocks. Keep an eye on what comes out of earnings for NVIDIA, and NVIDIA could be good, but probably AMD and Taiwan Semiconductor would be even better if NVIDIA makes a strong bullish.
What about the stock of the most hated guy in crypto now, Tesla, Elon Musk?
Yeah, good.
I had to get that in.
Thank you. Yeah, so that's another reason why I felt like, hey, I've got to call it. I'm wrong about the bearishness, because if May 14th had played out the doomsday scenario, then Tesla would have been the worst of the block. It would have fallen and just been crashing hard. It's not crashing hard right now. That's crazy that it's not crashing.
And Michael Burry, the big short, has a what, 500 or 50 million position short on this?
Right. So I mean, you should be expecting Tesla to just tank right now, even as we watch. It's not. It's down a little bit, but it's not tanking. And so to me, that says this market just wants to buy. And Tesla might have hard times. They've got all sorts of reasons why they might have hard times for a little while here. But all of these days, look how small these days are compared to what's come in the recent past, right? If we're having a big sell-off, we should see big moving days. We don't. That is a strong sign we're at the same place and we're not more volatile. We are less volatile. Now, I'm not talking about option volatility. I'm talking about regular movements, right? Low volatility is a bullish sign. And so I think that somewhere in here, Tesla finds a bottom and turns around against all crypto odds, right? And that might also turn around, Shukri, and say that through the summer, crypto finds a base and comes back. We'll see if it does. But Tesla is not it's not crashing. I don't want to go buy it. I'm interested in the semiconductors and Apple over the next few weeks as looking for new opportunities here.
Okay.
So right out of the gate, we got all three of the major indexes. We got the NASDAQ up, and the Russell is also up, and the S&P 500 is up. These are compared to well, this is the last 24-hour period. These are futures we're looking at. So they're not giving up this bullish stance that they're onto, and we're up for the day. Well, comparatively, that's a full 1% from where it was Friday. So strong moves, opening and continuing with the U.S. markets, and I think that's going to be the theme. People are going to be buying the dip, and June will probably be a pretty good month. So until next time, everybody, hope you liked the show, and
Yeah.
take care and trade well for today.